What is up, Steve here. I hope you are doing well. Today I'm going to talk about some data that came from AirDNA pertaining to short-term rental properties. So if this is a market that you're currently in or you're thinking about getting into, you're going to want to watch this video. Now, I think the short-term rental market is going to have a decrease in revenue for two separate reasons. For one, we had a mass amount of people coming into that market, and a lot of investors also converted annual rentals into short-term rentals, both in the single families as well as entire apartment complexes. The second thing is people are being stretched thin because of inflation and other factors. So that's going to lead to a lot of people not going on vacation as much, which is going to further affect short-term rental income for investors. So I'm going to leave this link for you guys as well, but let's dive in. And this is from AirDNA. Occupancy plunges as new supply additions come online. In May, hosts in the United States added 84,000 new listings, and after subtracting properties that left, it saw a net increase of 57,000 listings. There are 1.34 million unique listings available for rent on Airbnb and VRBO, which is up by 24.7% over the previous year and marks a new record high for listings in the United States. Supply growth substantially outpaced demand for the month, though, with occupancy falling by 8.6% in May to 60.2%. Listing growth could be slowing in coming months, though, as Redfin reports that their home buyer demand index was down by 12% year over year over the past month after a very strong start to 2020. All the markets are located in the southern half of the United States, with the largest cities in Florida, Texas, and Arizona reeling the big net increase in short-term rental listings over the past year. Now, you can see the top 10 growth. We have Phoenix, Scottsdale, Arizona, up by 40%. Houston, Texas, up by 55%. Miami, Florida, 27%. Austin, Texas, 42%. Los Angeles, California, 17%. Panama City, 26%, Atlanta, Georgia, 28%, Fort Lauderdale, Florida, 31%, Gatlinburg, Pigeon Forge, Tennessee, 30%, Las Vegas, Nevada, 39.2%. Now, again, if you guys are currently in this field in terms of an investor buying into short-term rental properties, you may have to change your strategy a bit. For one thing, when I am scouting out properties, I always run rental income. Usually, especially if I'm allowed to do short-term rental properties on it, I run it both as an annual rental as well as a short-term rental, because if you are relying just on short-term rental income, many times that's going to be much higher in terms of gross income than you would get off of an annual rental in many cases. So I think it is important that if you guys are looking just for short-term rental properties, that you guys do have a clear understanding. If that market does get hit, then you can go ahead and slide it into an annual rental. Now, I do have an entire playlist on this channel that talks about a lot of different strategies that you guys could take with short-term rental properties and how you guys can have a leg up if you guys currently have short-term rental properties or Airbnb properties, giving you guys a leg up on your competition. Because if you guys are starting to see, especially after this summer, if you're starting to see a decline in income, you're going to have to do additional things to make your property more superior over the competition outside of just dropping price. So I got this playlist at the very end of this video, and you guys can check out a ton of videos there. And thanks a lot for watching. See ya.